Okay, can we start?
Yes, sir.
So we have done with financial institutions. We have started, and I've told you we have banks, right? And then DFIs we need to discuss, and then we need to discuss NBFCs. So we have completed banks. So here we have discussed about commercial banks. We have discussed about cooperative banks, and we have also discussed about regional rural banks, right? Then we have also talked about, okay, DFI we will be discussing today. NBFC will be discussing the next day, and next day we will discuss. So apart from this, we have also discussed about different types of capital. Okay, so we have discussed about capital, and we have also discussed about securities. Securities means we discussed about bonds. Okay, and we have also discussed about the shares. Bonds we discussed about government bonds, private sector bonds. Government bonds we discussed about short term bonds and long term bonds. Private sector we have discussed about debentures, right? Commercial paper, commercial bill, convertible debentures, etc. Shares, preference shares, and the ordinary shares. So can we move to DFI today? Or before that, there is one more important concept that we need to see. Just give a heading: types of companies. You might have heard this proprietorship, right? Hindu undivided family, public limited company, private limited company, etc. So we'll try to understand. Maybe 10 minutes will take. So just write types of companies. So first one, sole proprietorship. Just 1 minute. I'm just coming. 1 minute. Sole proprietorship. Okay, what is sole proprietorship? It is a single owner. Just put a hyphen and write single owner. Proprietorship, single owner. Second one, partnership. Partnership. So there you can write, these are not big, these are not that important. Partnership, two or more owners. Two or more owners. Third one you write, Hindu undivided family. Hindu undivided family. So this is actually similar to the partnership only. So partnership among the family members. Okay, so family members of Hindu, Sikhs, Buddhist, Jain families. Okay, so the head of the business will be the Karta. Karta means the eldest member of family. So it is nothing but the partnership. So when we discuss about partnership, this is broader, right? When we talk about more than two or more individuals, two or more owners means it can be from any community, it can be from any family. But when we talk about Hindu undivided family, it is a partnership within the family members of Hindu, Sikh, Buddhist, Jain families. Okay, so head of business is actually Karta. Karta means the eldest member of the family. So the business will be in the name of the eldest member of the family. So these three are not that significant. Next three, the first one you can write limited liability partnership. Fourth one, limited liability partnership. Not B, partnership. P, limited liability partnership. This I'll discuss later. After 5 minutes I'll discuss this. Before discussing limited liability partnership, we will see what is private limited company. Private limited company, or private limited company and public limited company. We will discuss both together. Private limited, that is the fifth one. Sixth one, public limited company. So these are the different types of companies you will see. Okay, now what do you mean by this word limited? This limited you can see here, here also limited, here also limited. So these three type of companies you will see the word limited. What do you mean by this? I think when we discussed about one case related to Vijay Mallya, I've told you it is a limited liability company. So the liability is to the limit of ownership that he have, right? So limited liability means it is a liability of the owners or the shareholders is limited to their subscribed capital. So just write there, limited means liability of owners or the shareholders, is limited to their subscribed capital. Okay, so their company is a separate legal entity. Company and individual is separate. So just write one more line, company is a separate legal entity. Now when we discuss about the first three, the sole proprietorship, partnership and Hindu undivided family, here the company and owners are same entity. Okay, so here in these three cases even registration is also optional. But when we discuss about limited, when this limited is coming, registration with registrar of companies is compulsory. So registration with registrar of companies is actually compulsory here, but it is optional in this case. Okay, because here individual and company both are same entity. Here in this three limited, when the word limited is coming, individual and company are two separate legal entity. That means individual may not be liable for the debt or of the company, or if the bank go bankrupt, individual may not be liable. Okay, see, otherwise if you see in case of limited liability company, a company is issuing a share. Okay, for example, Reliance is issuing a share and you are buying a share from the stock exchange, like you are paying 2010 rupee and you are buying the share of Reliance. So if this company go bankrupt, can you be responsible for this? Can your asset be sold to recover the debt of the company? You are also shareholder, you are also getting dividend. So that is not possible, right? So that is the reason why the limited company means the liability is limited to the to some extent. So the company and the ownership is entirely different. Liability of the owners is limited to the subscribed capital. What is your cap? So let's suppose you hold only one share. Your liability is only this one share. Whatever value is there, you are sold off. That's it. Nothing more. There is no claim on your personal assets, your other assets apart from the company. Okay, so in your case I have just given you an example. Normally the owners of the company. I hope you understood. So limited liability means liability is actually limited to the subscribed capital. Are we okay? So now what is the difference between private limited and public limited? Can anyone tell private limited and public limited? Private
is the owners, the management control is with the private individuals, and public it's with government has ownership controls.
You're talking about private sector and public sector.
Yes, sir. Is that right, sir?
I'm talking about private limited and public limited.
I'm sorry, sir. I don't know, sir.
Even public sector also management may be given to private entities in case of strategic disinvestment. We will discuss about this when we discuss about PPP module, public-private partnership module. Under strategic disinvestment, the management may be given to the private also who's having expertise in the field. So you cannot conclusively say in public sector it is government and in private sector it is private. Okay, so that is also not conclusive answer. In case of private sector and public sector also. Here we are talking about private limited and public limited. In case of private limited, the shares, okay, it is actually privately held and it cannot be sold to the public. So let's say 2 to 50, whatever, private limited company, earlier it was like 2 to 50 members can start a private limited company. Minimum shareholders is actually 2 to 50. Okay, so it was actually amended later and it is now 1 to 200. Minimum numbers. So they only have the share, it cannot be sold to the public. That means what I'm saying is IPO, initial public offer, is not possible. So what is public limited company then? Which all companies can issue IPO, that is what public limited company. Or once a company issue IPO, that becomes public limited company. Or in another words, I can say whatever companies are there in the stock exchange, share market, they all are public limited company. So public limited company means those who issued initial public offer. They mobilize fund from the public by issuing initial public offer. That is what public limited company. So now let me ask you one thing. Can private companies be public limited company? Is it possible that a private company can be a public limited company?
Yes, sir.
Yes, because private company can issue IPO, and can government company can be a public limited company, or public sector company can it be public limited company? See, public limited company means issuing IPO. Then it is, if it is registered in stock exchange, if it is registered in the secondary market, it is actually a public limited company. So I'm asking you whether public sector companies are part of stock exchange, or is it public limited company?
So if they will offer shares, that will mean they are disinvesting, right?
So I think they can be public limited, the public sector, because many government banks are traded in the share market.
Yeah, all these government banks, the SBI and all these government banks, and you see this companies like BHEL, right? IOCL, all these companies are there in stock exchange. So these are public limited company, these are public sector company, public limited company. Okay, now Shivangi, you are not holding 100% ownership in all the companies. Okay, so disinvestment is...
I couldn't hear you.
Yeah, I'm not talking about 100% of the ownership is held by government. Then government cannot issue IPO only. Okay, so the public sector company cannot issue IPO. So if it is issued IPO, it will be public limited company. For example, BHEL, okay, IOCL, okay, this State Bank of India, all these are all these are there in public limited. All these are public limited company. All these are issued IPO. All these are mobilizing funds also. So I'm saying public sector company can be public limited company. Similarly, private sector company can also be public limited company. Can you give me an example? Reliance, okay, or TCS, Wipro, okay, all this Mahindra, all these are anyway private sector companies. They are also public limited company. So public limited company means if you issue IPO, if you mobilize fund from the public, that is public limited company. It can be private sector, it can be public sector. These are examples for public sector. You can see n number of examples, thousands of examples, and here also you can see thousands of examples. So we don't want to get into that details, but just understand this concept. Now I hope you understood the difference between private limited and public limited. It is not that private sector and public sector, both are entirely different. Public limited means issuing IPO. Simple. Once it is registered in the or listed in the stock exchange, all the companies, or I would say in this way, all the companies which is registered in the stock exchange or listed in the stock exchange are public limited company, or all the companies whose shares you can buy from the stock exchange are public limited company. It can be private sector, it can be public sector. Are we clear with this? Are we okay?
Yes, sir.
Yes, sir.
Okay. Now, I've told you the minimum numbers actually changed in the Companies Act, that in case of private limited company 1 to 200, in case of public limited company it is 7 to infinity, any number. Okay, because this is a minimum, 7 should be the minimum and any number is possible. Okay, there is no upper limit in case of public limited company. So the norms will be very rigid for public limited company. The auditing, etc. will be done periodically. Okay. So the norms are stringent in case of public limited company. Why the norms are so stringent for public limited company?
Because public money is involved.
Yeah, public money is involved. Okay, public is also involved. They can divert loans also, they can divert money also. Okay, so if public money is involved and if the public lose trust, they won't invest anywhere later. So that has to be taken care very well. Okay. Then why limited liability? I've told you the reason. Let's suppose you are buying the share of IOCL. Okay, you cannot sell your property in case this is going bankrupt, right? So what is the liability that you need to have? To the extent of shareholding, the subscribed capital, whatever share you have, that is the liability that you have. Nobody have claim over your house or property, right? That is the reason why limited liability. Is that okay? Now, when we talk about limited liability partnership, it is actually mix of, what is that? That fourth and fifth. What is the fourth? Fourth is partnership, right? It is actually, fourth is limited liability partnership. So before that, we discussed about partnership. So it is actually a mix of partnership plus private limited company. Okay, it is a mix of partnership plus private limited company. So the liability is limited, but it is partnership. Now just write Limited Liability Partnership Act 2008. Just give a subheading under that one provision. You can write Limited Liability Partnership Act 2008. Limited Liability Partnership Act 2008. Liability of partners are well defined or specified under this. Liability of partners are well defined or specified under this. So it is not that A, B, C, these may be partners, but if the company is going bankrupt, so the liability of each members are very clearly specified. It has to be specified. So the liability again is limited here. Okay. So for A, it is limited to the subscribed capital he have, or it is actually fixed. But in this case, liability obviously may be more than investment. Now, when we say corporate, what do you mean by corporate? Corporate, when we say it is actually public limited company. Usually corporates, we mean public limited company. But theoretically, if you see, when we say corporates, it is limited companies, any limited company. So it can be private or it can be public. Okay, but generally, corporate, when we say it is public limited company, those who issued IPO, like that. And stock exchange itself is actually a company. So initially it was a partnership. So BSE actually tried to issue IPO. Okay, and SEBI said you can actually do this. You can issue IPO, but you have to list it in some other stock exchange, not in your stock exchange. So we will be discussing about this in detail when we discuss about capital market. So I'm not getting into that. So I hope you understood the 6 different types of companies. So sole proprietorship, partnership, then Hindu undivided family, limited liability partnership, private limited company, public limited company. Okay. Okay, now can we discuss about development financial institutions, DFIs? So give a heading, development financial institutions. So we are talking about financial institutions. Banks we have done second dimension, that is development finance institutions. It is also called development banks. Just write few points under that. It is also called development banks. Okay, these are special type of financial institutions. These are special type of financial institutions that provide finance and technical assistance to various sectors of the economy to promote economic development. So what is the focus here? The focus is development of country. Okay, the focus is actually development of the country. So one more line you can write. They cannot accept deposits from the public. They cannot accept deposits from the public. So if they cannot accept deposits, then how they raise funds? DFIs. What is the source?
Lending.
No, lending, they will have to lend, no, from them money will go.
From government project.
Yeah, from government, from RBI, and they by selling bonds like that. Okay, so just right there, they raise funds from the government. They raise funds from the government, RBI, and also through issue of their bonds to the public. So they raise funds from government, RBI, and bonds. Now you know what you mean by bonds. Okay, so bonds means borrowing. So bond holders are the creditors or the lenders. So they will give money to DFIs. Okay, now what we need to discuss, one more line you write. They provide finance in the following forms. They provide finance in the following ways. First one, provision of medium and long term loans. Provision of medium in bracket you can write 1 to 5 years. Provision of medium and long term, more than 5 years. So medium term loans and long term loans. Or generally we will say term loans. They provide term loans. So if you see a statement that they provide short term loans, that is not correct. Okay, there is no short term loan. It is either medium term or long term. Generally term loans. No short term loan. 2. Refinance. Okay, refinance means if RBI, if NABARD is actually the apex institution which is taking care of agriculture. We'll be discussing this. If NABARD or SIDBI is taking care of industry. If NABARD want to give loans to agriculture, or if SIDBI want to give loan to industry. Now, if you are starting up an industry or some small scale industries or MSME, you cannot directly go and ask to SIDBI, right? Or you cannot go and ask to NABARD if you need any agriculture loan. So that's what I mean by refinance. NABARD will give it to banks. Okay, NABARD will provide it to financial institutions and will ask them to lend to agriculture sector or industry sector. That is what I mean by refinance. There is no direct finance, rather refinance. Okay.
Sir, how can they raise funds from governments?
No, government will give funds to NABARD. In the budget it will be allocated. From RBI also they can get fund.
Okay.
Okay. Now third function, credit enhancement. Credit enhancement. So credit enhancement means actually by giving, there are different methods. So most important one, they give guarantee against loan. Okay, so for example, there is a firm A. Firm A want to raise funds. Okay, so they need some fund. Okay, so this is a firm, and when they approach a bank is not ready to lend for the particular project. Okay, so now this person can approach SIDBI. So what the SIDBI will do is, SIDBI is the apex institution related to the industrial sector. So SIDBI will give guarantee. Okay, so here SIDBI will give guarantee against this loan, and then bank will give loan to A. So in case of default, it is the responsibility of SIDBI to pay back to bank. So then bank will give loan to the company. So it increase, it increase the opportunity of, or this is actually enhancing the credit when the guarantee is given. And for this, you need to pay a commission. This firm will pay a commission to SIDBI. Now, just like that, SIDBI won't give guarantee. SIDBI will conduct a viability study. Okay, there will be a team which will be conducting viability study of the project, and then only the guarantee will be given. So the bank don't want to conduct any viability study or anything. The experts in the SIDBI will be conducting that, and only after that the guarantee will be given. So this person will get the loan and SIDBI will get the commission. Okay, so here loan, SIDBI will give guarantee, bank will give loan, A will give commission. So this is how the credit enhancement, what I mean. Now, how this is viable for SIDBI? See, if let's suppose 100 companies SIDBI is giving guarantee, maybe 2 to 3 companies will go bankrupt. Other companies will do well, right? So the chances are rare that the companies will go bankrupt. So the commission itself is enough for SIDBI to take care of it. Just like how you are going for insurance. It is not that all the vehicles are making accident, right? Every year you are taking the insurance premium. In case of health insurance also, in case of the vehicle insurance also, you are taking this. But how insurance companies are making profit? It is because hardly few are making accidents, or hardly few are getting admitted in the hospitals. So not everybody. So that premium could be used. Similarly here, you are getting commissions from 100 companies. Out of this, maybe 2 or 3 will go bankrupt. So SIDBI actually can manage it. Okay. So the best thing for companies actually, now how it is viable for the company, if this company is approaching the bank without this guarantee from SIDBI, bank may tell, either bank may not give loan, or bank will tell that this is high risky loan. So if it is high risky loan, bank will charge high interest, right? So you need to pay 15% interest. Let's say 15% interest. Now instead of doing this, if this company A approach SIDBI and give a commission, SIDBI will conduct a viability study. If the project is viable, then bank will get this guarantee. So it will actually enhance the credit worthiness. So this interest, instead of 15%, it will be 12%. So this person effectively need to pay this difference as the commission. So in any way, this is beneficial. So that is what I mean by credit enhancement function of DFIs. Okay. So what is the ultimate objective here? If this company is having a viable project, if it is an innovative idea, then make sure that finance is available for the implementation. So now we have discussed about 2 cases, either refinance, or this option. Okay. So any of these 2, the DFIs can do. There are many other methods also.
Sir, please explain refinance.
Refinance.
Yes, sir.
See, refinance means, let's say, again SIDBI if you take. Okay. So if this firm cannot go and directly get from SIDBI, right? So firms cannot get it from SIDBI. So SIDBI will give money to financial institutions and will ask to lend to some particular sectors. For SIDBI, since it is taking care of industry, will ask to lend to industry related sector. So this person may get benefit. If it is NABARD will give money to financial institutions by telling them to lend to agriculture related. So maybe some farmers will get the benefit rather than going to NABARD directly. It is not possible also. This is not possible. So that is what I mean by refinance. Instead of directly giving to this person, giving through financial institutions. Refinance. Okay? Anjali?
Sir, then what's the difference between second and third?
Second and third means you are talking about guarantee.
Refinance and credit enhance.
In case of the third one, I am saying A will approach, for example, DFI. Okay? And DFI, the SIDBI will conduct a study on the project. So if you have an innovative project, the firm have a very good project, approach SIDBI and will conduct a study and will give guarantee. Here no fund is given from SIDBI. So now bank. Okay. Bank will give loan upon this guarantee. The credit worthiness is increased. So loan will be given. Here commission is paid. Earlier is entirely different case. SIDBI is directly giving money to banks and asking to lend into a particular sector, industry related sector, not to this company specifically. Here, okay, yeah. Third one, another method in which, fourth, right? The other method in which they can give money or they can contribute in the development is like subscription to shares, right? Subscription to shares. You will subscribe the shares of company or debentures, shares, debentures of companies. Okay. Now, if you subscribe share or debenture, so debenture means what? Can I say it is similar to a loan only? Is it similar to a loan? We discussed this concepts yesterday. What is shares? What is debentures?
Yes, sir.
Debentures are nothing but the loans only. Okay, when you are a debenture holder means you are actually giving loan to the company. So here you are subscribing to the debenture means you are actually giving a loan to the company. So that way you can help the company. Secondly, you can subscribe the shares. So when you're subscribing the shares, in case if the company is going and making profit, what will happen? SIDBI will get the dividend, right? So SIDBI will actually get the share of the profit. So this is, but before doing this, they will conduct a viability study. So close to 90% of the study will prove correct only. So since 90% is accuracy is there, you can buy the shares or debentures, so it will do good. So either you will get the profit if it is shares, or you get the interest and the principal towards the end of the period, okay, in case of debenture. So study will be conducted before doing any of this. That is what the fourth option. Fifth one, underwriting. Underwriting, a very important one. Okay, just write one line over there and then I'll explain. Under this, DFI guarantees to purchase. DFI guarantees to purchase certain percentage of share. Certain percentage of share of an IPO of a company. Certain percentage of share of an IPO of a company. In case it remain undersubscribed by the public. In case it remain undersubscribed by the public. Underwriting commission, I mean the commission which is charged by SEBI, not any institution. Underwriting commission is charged for such guarantees. Underwriting commission is charged for such guarantees. Before also I have told you, in case of guarantee against guarantee will be given by the DFI to the bank for a company, in that also commission was there, same commission was charged here also. So here what they're saying, for example SIDBI, if you talk about SIDBI is giving guarantee to purchase shares. So here guarantee to purchase the share of a company. So let's say company is going for IPO. Okay, the company A is going for IPO, initial public offer. So if this company is new company and issuing IPO, there is a possibility that nobody will purchase any share. So nobody may purchase share. So this company can go to SIDBI. Okay, so SIDBI obviously will conduct a viability study of the project, and then SIDBI will give a guarantee that if it goes unsubscribed, certain percentage, let's say company A want to raise 10 crore shares. Okay, so 10 crore share. So SIDBI will tell that will purchase 30%. That means 30 crore in case if it is unsold in the public. Are we following? Are you getting this? So SIDBI will give this guarantee. Now what will happen? SIDBI will give this guarantee only after conducting a viability study. So individuals, if you see from the perspective of individual new company to conduct a viability study and all is very difficult for individual. But now when SIDBI is giving this guarantee, it is sure that SIDBI has conducted a study, so this is a viable project. So don't you think that people are ready to invest now when SIDBI is giving a guarantee? So people are now ready to invest. Now in case if still people are not investing, or let's say let's say 8 crore is mobilized. 8 crore is mobilized, but you need 10 crore. So SIDBI promised up to 30%, that means 30 crore. Now you need only 20 crore, so SIDBI will give that 20 crore. Okay. Now in case if you are able to mobilize 10 crore, that means completely you got from the public, so SIDBI will give nothing. Okay, but still you have to pay the commission. In case if the company is undersubscribed, like again 6 crore, then how much SIDBI have to give? 3 crore, because that is the guarantee. So not 3 crore, 30 crore. No, shit. This is 20, not 20, this is 2. Somewhere I've missed out. So if it is 8 crore, 2 crore will be given. If it is 10 crore, nothing is given. If it is 6 crore, it is 3 crore which will be given. Right? So the idea is when SIDBI is actually giving the guarantee that SIDBI will purchase certain percentage of the share, the common people will get an idea that SIDBI conducted a viability study and this project of this company is actually viable. So confidently they will invest now. Otherwise, common people may not invest also in the company. So it would have been zero investment. Now there is a possibility that you will get everything and 10 crore from the public itself. For that, SIDBI will charge a commission, underwriting commission. Okay. Okay. Any doubt here? Any doubts?
Sir, underwriting commission.
Underwriting commission means before also I've told you a commission, same, exactly the same. So SIDBI is doing a job here, no? SIDBI is conducting a viability study. Before what I've told you, SIDBI is giving a guarantee to the bank, right? So you are getting loan from the bank, the firm A. So SIDBI is charging a commission from A. That is the first case that I have discussed. Now here the guarantee is not given to bank. The guarantee is actually given to this person that you go for IPO. In case if you go for IPO, if you are not getting the, let's suppose he want 10 crore share. He want to sell 10 crore share. If you are not able to sell this, we will purchase 30%. Let's say 30 crore. So this is what you mean by underwriting. ICICI is one of the leading underwriter, but now this is not mandatory. Earlier underwriting was mandatory if a company was supposed to issue IPO. Now it is not mandatory. There are other norms also. We'll discuss that in capital market. So underwriting means now SIDBI or the DFI in general, I'm talking about SIDBI, one of the DFI, will give the underwriting or underwrite or give in writing that we will purchase 30%. Now, just like that, SIDBI won't give. SIDBI will conduct a proper viability study with the experts. So people will get more confidence, right? So people will get more confidence because SIDBI conducted a study and SIDBI gave the guarantee. So obviously people now start buying IPO. So I have discussed 3 scenarios. Let's say 10 crore is what you need. An entire 10 crore is purchased by the public. So SIDBI in that context pay nothing. Nothing is paid. But still commission have to be paid because the viability study conducted, guarantees given, commission has to be paid. Second possibility, you may be able to get 8 crore. Then SIDBI will pay the balance 2 crore because the agreement is up to 3 crore you will pay. If it is 7 crore, then 3 crore completely paid. If it is 6 crore, then also 3 crore because this is the maximum that is offered by SEBI. And for this guarantee which is given by SEBI to purchase 30% of the share if you go for IPO, and if it is unsold, if it is unsubscribed, for that guarantee you are charging the commission. Earlier, bank guarantee was given, so bank loan is given. For that guarantee, you are charging a commission. Here, for underwriting, you are charging a commission.
Okay, sir.
Yeah. Okay. No, you're right. So these are the functions we have discussed. Mainly development role. So one more you write under that. They also provide technical assistance to firms. They also provide technical assistance to firms in the form of preparation of project reports, in the form of preparation of project reports. Anjali, your mic is on. Preparation of project reports, conducting viability studies, provision of technical advice, etc. Provision of technical advice, etc. Provision of
Sir,
technical
please
advice.
repeat.
I'm saying apart from all those functions that we have discussed, the DFIs also provide technical assistance to firms in the form of preparation of project reports, conducting viability studies, and provision of technical advice, etc. Okay, now we will see what are the different DFIs. Very important. They can ask you from everything and chronological order also. So DFIs are different for different sectors. Okay, so like first we will see in case of industry, or here we will discuss together industry, and then we will see foreign trade related, and then we will see agriculture, and we will discuss housing. So this is what actually somebody was talking about National Housing Board yesterday. That is a specific, which is coming under DFIs. Okay. So industry, can you tell me what all will come under industry? What are the main DFIs under industry?
SIDBI, sir.
SIDBI, obviously, I was talking about that till now. IDBI. Okay, so SIDBI, small industries. Okay, then Industrial Development Bank of India, Small Industrial Development Bank of India. We'll come to that. We'll discuss this in detail. Apart from this, just before I've told you one of the major underwriters, main underwriter.
ICICI.
ICICI. Okay, ICICI actually established as a development financial institution. Later it was converted to banks. And then both function is doing now development DFI and bank. So it is considered as universal bank. I'll come to this. Okay. So ICICI, one of the major leading underwriter. Then IRCI, we'll discuss this. Recent one, Mudra Bank. Mudra Bank also as a DFI. What about foreign trade? Only one. What is that?
Exim Bank, sir. Exim Bank.
Okay, Exim Bank. Agriculture, only one.
NABARD.
NABARD. Okay, housing, only one.
NHB.
NHB. National Housing Bank. We'll discuss this. Okay. So these are the every DFIs will discuss. So first one, IFCI. Right there, Industrial Finance Corporation of India Limited. This is not important, so we will skip this. Industrial Finance Corporation of India Limited. Industrial Finance Corporation of India Limited. Established in 1948 by Government of India. Established in 1948 by Government of India. Second one. Second you write, that is most important one. ICICI. ICICI. Write the full form. Industrial Credit and Investment Corporation of India Limited. Industrial Credit and Investment Corporation of India Limited. When it was established? This was actually asked recently only, 2017, I think, chronological order. When?
1955. 55.
1955. Initiative of Government of India and what is the major other organization which was helped in the establishment of ICICI? Or established as a subsidiary of what? Initiative of what? Government of India. Okay, you can write. It was established in 1955 by an initiative of Government of India, obviously, and World Bank. Okay, World Bank. It was established in private sector or public sector? Private or public? Hey, nothing. Why no response?
Private.
Yeah, private sector. Okay, so it was established in private sector, and you know this is the only DFI in the private sector. So that's why it is very significant. Only DFI in private sector, and there's a leading underwriter also. I've told this point already. Okay, then in 1994 it established ICICI Bank Limited. ICICI Bank Limited in 1994 as its subsidiary. So what is the main company? ICICI. This is ICICI Limited. ICICI Limited. Okay, you know what is limited. So ICICI Limited is the main company. 94 subsidiary ICICI Bank Limited. Okay, see 94 we have discussed about Narasimham committee, and I've told you at that time itself new private banks, foreign banks, etc. has to be given license. So in 94 actually RBI granted license to 8 banks. ICICI, HDFC, Citibank, etc. got license that time. Okay, now so ICICI Bank Limited was established in 94. In 2002, this ICICI Limited, this one, there's a parent company merged into ICICI Bank Limited. Normally what will happen? This company, subsidiary company, will be merged to the parent company, right? Main company. So here the opposite actually happened. So this is the subsidiary, main company merged into the subsidiary company. This is what? Reverse merger. Parent company merged to the subsidiary company. And this reverse merger converted the ICICI, okay, the ICICI Limited or ICICI Bank Limited into a universal bank. And this is the first universal bank in the country. Universal bank. This concept was also asked in prelims. What do you mean by universal bank? It will provide the function of both bank and DFI. Okay, the idea is it's like financial supermarket in simple language. Everything is provided. Bank, it is bank also, it is a DFI also. So what is the first universal bank in India? That is ICICI. Just write one line over there. It is a financial institution. What is universal bank? Just write under that. It is a financial institution which undertake different types of financial services. Which undertake different types of financial services or financial businesses like commercial banking, comma DFI, which involves which undertake different types of financial business like commercial banking, DFI, insurance, etc. under unified structure. Under unified structure. Okay. So now almost all the commercial banks are universal banks, but the specialty here is ICICI was the first one. That's why we are discussing this now. Okay. So that's about the ICICI. Next is IDBI. You can write IDBI also. IDBI. Industrial Development Bank of India. IDBI, Industrial Development Bank of India. It was established in 1964 as a subsidiary of, anyone, can you tell me? As a subsidiary of, ICICI was a subsidiary of World Bank. So here, RBI. Okay, but later it was granted autonomy. You can write there. Later it was granted autonomy. Right under that, it was the apex institution in the field of industrial finance. It was the apex institution in the field of industrial finance. In 2003, it was converted into Universal Bank. In 2003, it was converted to Universal Bank. Okay, so when we talk about ICICI, it was in 2002. So that's why I've told you this is the first one, this is the second one. So IDBI actually is a public sector bank, right? IDBI, public sector bank, ICICI, private sector bank. Okay.
Sir. Hello, sir.
Tell me.
IDBI is recently converted into private, categorized into private sectors.
Okay. Yeah, you told me before also when I've discussed about that.
In 2019, sir.
Yeah, I forgot to refer that day only. So okay, so that we need to check. Okay, so this is also IDBI also then private sector. I will confirm it. That day I forgot to check that. Okay. So anyway, IDBI in 2003 it became Universal Bank. In 2002, ICICI Universal Bank. Okay. So IRCI, SIDBI, Mudra Bank, everything else we'll discuss tomorrow. Not tomorrow, we'll discuss Monday. Okay. Now, can you do one thing? All of you, can you download this app? I will send you a link, Zia IAS app you download, and then you sign up in that. Once you download, you sign up, and then you send me your mail ID. I will, now itself, I'll send you the link of the app. Okay. So once you've done the sign up, you send me the mail ID. Then I will give you access to the app so you can get all the videos over there. So we can mix the classes with the videos and the live classes so that we can finish in time.
Sir,
Okay.
I have a doubt.
Tell me.
What are masala bonds?
Masala bonds are issued by, that we will discuss under World Bank context.
Okay, sir.
Not at this time. We will discuss. When we discuss about international organizations, World Bank I will discuss. Then only it will be easy to understand. Issued by...
Sir,
yeah, tell me.
sir, you told us that RBI regulate treasury bills. Does RBI manage state government security also?
RBI?
Manages state government securities also.
State government securities also RBI manage.
Okay.
So, excuse me, sir.
Sir,
I have a doubt, sir. If you are not in a hurry, I can just continue, sir.
Illa, tell me, Ashwin. Actually, I'm in a hurry for the next class. That's why by 8:30. But it's okay. You can ask, no problem.
Sir, it is regarding this IDBI and LIC. See, LIC is actually owned by the government of India. LIC has purchased 51% stake in IDBI. Then why are they categorized?
I am not aware of these developments. That is why even when Dilip also said, I am not aware of this thing, that this purchasing of share or disinvestment or whatever which has happened. So I'm not aware of that. Actually, what happened with IDBI that time, I'm not aware of these developments. So if it is connected to that IDBI, I don't know about that.
Okay, sir. Okay. Fine. We leave it.
Entire situation, what actually is that discussion? Entire that scenario, I don't know.
That's okay. We can discuss.
I will refer to it, and anyway, I will update it later.
Sure.
But
Thank you.
Yeah. Okay. So see you.
Thank you, sir.
Yes, sir. Bye, sir.